Welcome to this tutorial on our first strategy based on the Million Algo Lightning Strike Indicator. Today, we'll guide you step by step through the process of identifying optimal trade entries using the power of the expansion and compression zones. In algorithmic trading, a concept adopted by financial institutions worldwide, patterns often repeat in the market. Expansion and compression zones offer us a clear visual representation of how algorithms aggregate and execute orders around key price levels, helping us make more informed trading decisions. Let's dive into how you can leverage these patterns to trade with greater confidence, starting with the Million Algo Lightning Strike Indicator. To get started, you first need to access the premium Million Algo indicators from our website, millionalgo.com. Once you've gained access, open TradingView and follow these simple steps. Navigate to the Indicators menu. Under the Invite Only tab, select Million Algo Lightning Strike. After adding the indicator, change the time frame to 5 minutes for the first strategy. Then, click on the Settings wheel to customize your sessions and strategy preferences. These tools will set the stage for the strategies we'll cover in this video. I'll explain more about the settings in future tutorials. Here's a quick overview of my settings for different sessions. In the first part of the settings, you'll find session and display options. You can turn on or off the New York, London, or Tokyo sessions on the chart, or choose to show the FVG or VWAP lines if you prefer. In the next section, you'll find the Lightning Strike settings. We'll enable this later in the strategy. Next, we have session settings. Choose the color that suits you best for better visualization for each session. You can also adjust the expansion zone and set the start and end hours for the range. For now, there's no need to change those. Additionally, you can extend the zone levels until they intersect with the next session. We can always tweak these settings later based on the strategy you're working with. But for now, these settings will work perfectly for the first strategy I'm about to show you. Now, let's dive into the core of this strategy, the expansion and compression zones. The dotted pink compression lines mark the start of the compression zone, which is considered the accumulation area for liquidity and orders. This zone sets the bias for the session. As the compression block completes, the solid upper and lower lines form the expansion zones. When we see a candle close outside of the expansion range on the 5-minute time frame, there's an 80% probability that the price will continue in that direction. This is how the zones look in the context of price action, and this is where we start identifying high probability setups. Within the settings of the Lightning Strike indicator, there's an option labeled Extend Tuesday New York line. When enabled, this feature extends the Tuesday New York session line into the following week with a dashed line. This line is especially useful for swing traders, as price tends to react significantly to it, either respecting or rejecting it. For example, in the previous Tuesday session, price initially treated the line as resistance, then broke through it, turning it into support. After a pullback, the price continued upward with strong momentum. If you're a swing trader, definitely consider adding the extended Tuesday line to your strategy. Now let's look at a trade example. We've already seen the formation of the expansion and compression zones. What we need to identify next is a breakout on the 5-minute chart, followed by a candle closure outside of the expansion range. When you see this breakout, mark the candle with a vertical line and ensure it's synced so it's visible across other time frames to identify the beginning of the breakout. Once confirmed, switch to the 1-minute time frame to refine your entry. On the 1-minute chart, start by marking the range between the expansion and compression levels where the breakout occurred. This will help you identify the first area of interest for your entry. Then, identify fair value gaps, FVGs, created by the breakout. A fair value gap is formed when 3 consecutive candles leave an unfilled space in the price action. This gap signals an area of imbalance where buying or selling pressure dominated. Take a closer look here. We have three candles. The body of this one and the wicks of these two have left a gap in between. This gap indicates a price imbalance where buying pressure dominated and no selling pressure was present. If you find identifying FVGs manually hard and overwhelming, don't worry. Simply go to the indicator settings and tick the box for fair value gap. The indicator will automatically detect and plot these gaps for you. Let me know if you'd like any further tweaks. Now that we've identified our key areas of interest, let's discuss how we manage trade entries. We'll mark the FVG area where the breakout occurred as the second area of interest. You can also change the color for better differentiation. The third area of interest will be from the 50% level marked by the middle line to the opposite compression level. You may choose another color based on your visual preference. Now let's go over how we manage our trade entries. Once we've confirmed the breakout on the 5-minute chart and switched to the 1-minute chart, we're looking for a pullback into one of these predefined areas. The goal is to enter a trade at a discounted buy or premium sell price. However, be mindful that price may never retest our areas of interest. When the price does pull back, you can adjust the settings to fit your strategy. Open the indicator menu again to enable lightning strike and adjust its distance. Some traders prefer a shorter distance, like 5, while others opt for a longer range, like 15, 35, or higher. For this example, we'll set the strike distance to 5, as we're using the 1-minute chart, and adjust the strike shape to one that best suits your visual preference. Once everything is set, activate the lightning strike for the final step. With the settings in place, we wait for a signal on the 1-minute time frame, ideally rejecting one of our three areas. The first signal we get is a sell, but we're looking for a buy. We get the buy signal here. It's very important to wait for the signal candle to close with the signal intact before executing the trade. Once confirmed, mark your entry for trade execution. For risk management, place your stop loss just below your area of interest, accounting for the spread. Consider leaving a bit of extra room. We aim for a risk-to-reward ratio of 1 to 1.5. Calculate the appropriate trade size based on your equity and execute the trade. Allow the trade to play out. As we can see, the trade is moving in our favor, and we hit our profit target. That's it for our first strategy, using the Million Algo Lightning Strike indicator. Stay tuned, as I'll be sharing more strategies, examples, and tips in the coming videos. Don't forget to subscribe and turn on notifications so you never miss a valuable update.